We're just about to get started here. Just a few minutes, just about 3 minutes away. And I'll kill that echo. Hope everyone's having a good start to their Taco Tuesday. Certainly a nice rebound we're experiencing this week. All right, all right, all right. Good morning out there, everyone. It's time for this week's episode of Back to the Futures with me, Markets and Mayhem. We're going to focus on using Bookmap to analyze order flow in stocks and futures. And it should be pretty fun. We've got a lot of interesting things going on underneath the surface in these markets. So let's dive right in. So the folks at Bookmap would love for you to join them on their Discord. There's regular educational live events. And that's a pretty good way to get a jump start on learning more about the platform. You can visit discord.com/invite/bookmap or use the QR code on screen. A little bit about me. Been trading for about 20 years, and I would not change it for any other passion. It has been such an amazing experience to learn so much about how everything is glued together. Whether it's the markets, the global financial system as a whole, the economy and that interplay between the economy and the markets and earnings, it's so much of an educational experience that also allows us to make money. So it doesn't really get better than that. And the best part for someone like me that's a lifelong learner is this is a lifelong learning project. There's never really a point where you can say, boy, I know everything there is to know about markets. They're always evolving, they're always changing, and that's what makes it fun. And that's also why it's dangerous to be complacent or to think that a certain system that we have that's working in one market regime may continue to work in others. Part of the challenge of remaining an active trader, someone who's not burned out, who still has capital, who's still got their skin in the game and is enjoying it, is embracing that constant change. The only guarantee you're ever going to have in trading is that there's going to be change, right? And that's the only guarantee you have in life anyway. So it's not that much different than other elements of life. So my wisdom for today that I want to share with you all is stay passionate. Don't rush to the end either. Enjoy the journey. I know a lot of folks think, oh, I'm just going to do this. I'm going to be able to quit my day job. I'm going to get rich and it's going to be awesome. Cool. That's a great long-term goal. But first, get your bearings. Figure out your system. How are you trading? Do you know why some of your trades make money and some don't? Because until you start to know that, you're not going to be able to be consistent. You're not going to be able to be systematic, and you're not going to be able to run it like a business. So finally, trading really is a business. You're buying and selling inventory. You're hoping to capture a positive spread consistently. That's the nature of the game. We don't have to make it more dramatic or more glamorous than it really is, or try to make it something that it's not. It is a business, and that means we always want to have capital for the next hour, next day, next week, next month, next year. You've got to make sure that you're liquid, which means you manage your size, you manage your risk, and you don't take trades just for the sake of taking trades. I know sometimes it's like, oh, I've got to have skin in the game, or I'm missing out on something. That's not true. In fact, a lot of the time it's about waiting for the setup, taking the setup, and it may be something that doesn't even last that long. Maybe that setup lasts 20 minutes and you get 30 points, and then you're done. And you move on and wait for that next trade you can snipe, right? It's a lot more of a methodical process, and a lot more agility is required. But that's what it takes to really get good. To build your system, to be consistent, and most importantly, to understand why the trades that you're doing work and why the trades that you're doing don't work. And I recommend journaling that. Journaling why you're getting into something, how, like, are you scaling in all at once? Or are you scaling in or going in all at once? You know, what's your emotional state? What's your thesis behind the trade? How are you going to manage your risk? And then you can go back to your journal. You can see what kind of trades are working and what aren't. And then you can start to build that consistency. That's a really important part of trading. So that's my little sermon for this morning. Why do I watch Orderflow? Well, mostly because there's valuable clues in the market that are being left behind that we as traders can absorb and utilize to better analyze where price action may go. So for us, when we're trying to consistently pull out money from the market, a lot of it is about finding setups. So that's the biggest part about order flow, is you're really looking to find potential setups, turning points that can happen from exhaustion, that can happen from large amounts of orders coming through to kind of say, okay, enough. And I want to give an example. I don't have the screenshots right now, but I'll probably tweet it out a little bit later. But essentially yesterday, we saw a really, really, really large iceberg trade setup that marked pretty much the bottom during the trading day in the afternoon. And essentially what happened was you saw about 5,000 icebergs come in over 20, 30 minutes. It was extremely aggressive buying in ES. And then, of course, there's a convenient headline that shoots the market higher. Did someone know in advance? Maybe. Or maybe they were just lucky on the timing, or maybe they were just defending a key level because it was a level where there was a lot of interest in puts. Whatever the case may be, that 5,000 iceberg exposure, which is a pretty big amount, I think that's like, what, 1.5 billion or something of notional, that marked the bottom at that moment. And it took a little while for the market to sort of settle in, and then we started to move higher on those headlines. Now, you got to watch for that order flow that hits the tape of that kind of magnitude, because any other desk that sees that much capital coming into the market is going to stop trying to fade it. They're going to stop trying to fight that tape. And so that's the other thing. When you see that, you know there are some much larger trading desks out there saying, you know what we want to do? We want to start buying this dip because we think this thing's about to move higher. Or at the very least, we want to cover our shorts because we want to get out of the way of what could be a right tail that's fattening here. So that's a really important reason to watch the tape. You can see these things coming across, and they can change how the market's trading in near time. Now, why do I use Bookmap? Well, I mean, for example, yesterday, that tells you a lot, right? Being able to see those icebergs and knowing that they are, in fact, icebergs. This is an important clarification, by the way. Because a lot of the time when you look at this order flow after the fact in something like volume profile or otherwise, you can only infer from those deltas what it may have been. You're not going to know for sure. So a lot of that is just basically, hey, we think this looks like an iceberg. Boy, there sure was a lot of volume there. What I like about looking at MBO data and visualizing it through Bookmap is, in fact, you know with certainty those are icebergs, and you also know when they're happening and at what price. That does help you to derive a bit of an edge if you use it constructively. And for me, that means I'm only looking at the icebergs of larger than normal size, so that I'm tuning out a lot of the other activity that's less consequential for price discovery. So getting into today's pivot, we're looking at 58.39.25. This is a really important level on my swing chart. And this is something that the S&P 500 futures dynamic pivots that we have on TraderAid isolated as a level where above it, we're likely to get a decent extension higher. And below it, if we reject there, we could retrace a good chunk of this pre-market move. We are just about 22 minutes away from the market open. So let's watch that 58.39.25. We got pretty close to it. Pre-market, we got to another one of my pivots at 58.34.25, but that's a minor pivot. This one's a major pivot. It's kind of a big deal. I'm very interested to see how the market reacts here. My overall outlook for this week that I shared with TraderAid members on Sunday evening was that we're looking for range expansion. So we've started to see that, right? We've taken out that trading range we were in during triple witching week, which is to be expected. Once you get out of OPEX week, you tend to be unclenched from gamma. That's where the real dynamism starts to come back to the market. It's not on OPEX or as we lead into OPEX. Often it's right after. Monday didn't disappoint. In fact, most of that move happened pre-market, as you'll note. And it was kind of gappy. It leaves a little bit of poor structure behind. It may have to be retraced later and cleaned up. But at the end of the day, I think we're likely headed to SPX 5800, which is about ES 5848 or so. So this is a level that's going to be really important to determine whether or not we're able to get there more quickly or we bump our head and consolidate. But I think one way or the other, we kind of get pulled magnetically into SPX 5800, and that's going to be another pretty important decision level this week. And of course, we have catalysts like GDP and PCE this morning at 10 a.m. We have new home sales and conference board consumer confidence. So all that is going to be important for setting the tone as well. Let's take a quick look at the options market. And this is really interesting. There's this huge amount of positioning just around where we are in price, right? So you look at, I think it's about 57.75. You've got this wall of calls. We're set to jump above with this pre-market tape. We're already above it in the pre-market right now. So we could see that if we look at that on ES, that's about 58.1850. And we're trading 58.30. So sometimes you see these wall hops pre-market, which is interesting because they do tend to exert a more resistant influence during the regular trading hours, but pre-market, it seems easier to jump above these levels. So indeed, we're jumping above that wall of calls pre-market. We'll see how we open, but it's seeming more and more like that upside range expansion is set to continue into today's tape. So again, watching that pivot at 58.39.25. Now let's go through some quick deals, and then we're going to dive right into Bookmap. If you'd like to get up to 40% off of Bookmap, check out TraderAid.com/Bookmap. That's TraderAid.com/Bookmap, and scroll down to the special offers. You can bookmark the Bookmap link for later, TraderAid.com/Bookmap. It'll redirect you to their website on a special page that we have to be able to offer this exclusive deal. And if you'd like to check out what we're doing at TraderAid, our custom indicators, our trading ideas, our educational resources, and our awesome community, visit TraderAid.com and learn more about us. And at checkout, use Mayhem20 for 20% off your first week, month, quarter, 6 months, or year. All right, let's dive right in to Bookmap here. And let's look a little bit at the overnight session. I'm just going to rearrange a few things. So we can see overall it's been a very well bid overnight session. just grinding higher pretty much just after the European Open, just grinding higher here, getting a little bit of passive buying right here. You wouldn't see it on this chart, but we're just bouncing off the big green line, or the BGL. That's a EMA 21 period on a 5-minute chart, the BGL. It's a pretty good tool if you're trading this market here. You know, you basically have an opportunity to look at what the prevailing momentum trend is intraday. So, overall looking very constructive as we approach this market. We do have Gamma 1 overhead, as well as some of those levels I discussed earlier. We've got a pivot at 58.3425, which we saw a little bit of rejection on. And then another pivot, that major pivot at 58.3925. That's going to be the big level to watch. If we do push above that and build acceptance, I think we get an easy 10 handles out of it, kind of getting pulled right up into that area that implies that we're hitting 5800 SPX, essentially. The delta right now is about 48, let's call it 48.50. Let's take a look at the NASDAQ here as well. Imagine it has a pretty similar look. Yeah, pretty much basing and then building from the overnight session, also looking pretty constructive as we get into today's tape. I'm just going to kind of drag some of these futures contracts together, just get them all in the same spot. There we go. Let's take a look at gold too. Just from that overnight session, that's had not quite the same amount of optimism, but you did see a bid off that consolidation period, got up, started to make a bit of a run, pushing up to new overnight highs, and then got sold down below the point of control, now pushing right back to those highs. You see a little bit of passive distribution here, that 10 iceberg sell, and then 125 contracts stopped out, so shorts getting stopped out here, forced to buy. So one reason I also like to say the sellers end up being motivated buyers. If they're selling short, and you could see on the session volume profile down here around, say, 30.23 down to 30.19, look at all that aggressive selling on the session volume profile deltas. So you could see if you were shorting into this move, and certainly folks were, as this started to come back up like a beach ball underwater and push above the point of control, those same folks become motivated buyers because they want to buy back that short exposure as they get further offsides in their positioning. This is one reason why watching the session volume profile deltas can be really important to understanding the dynamics of what's going on the tape. So folks, while I'm streaming, if you have any questions, feel free to post them in the chat. If you're on the Discord, make sure to tag me in so I see that, and I will be checking in on those questions throughout the session. And that includes chart requests, questions about how Bookmap works, all of that. So we are just about 14 minutes away from the open. We're going to go over a couple of the things that we're looking for in today's calendar. Right now, Feds Williams is speaking. We're getting a little bit of headlines from him talking about households and firms are seeing heightened uncertainty. 10 a.m., we have new home sales. The forecast is for 680,000. The previous reading was 657,000. At 10 a.m., we also have U.S. Conference Board Consumer Confidence. Forecast is for 94. Prior reading was 98.3. Those are the two big macro data points today. And then, of course, we can at any time have headline risk. We know that it happens, much more frequently under the current administration. This reminds me a lot of what it was like the first time around, where sort of headlines can come out of left field and they can be either side. They can be a left tail or a right tail catalyst, right? So headlines that are talking about more tariffs or any other kind of aggression like that tend to be risk off. Headlines that are talking about, exemptions for tariffs or deals that have been reached or delays of tariffs, anything like that tends to be more risk on. So we're looking for those headlines as we go out through the day as well. And I'll be watching a couple of different sites for those exact type of headlines as we're in this session. I'll also stay on for just a couple minutes after the macro data at 10 a.m. drops so that I can share my thoughts on the market reaction in the data itself. Going on throughout the day, 12 p.m., we've got ECB's Nagel speaking. At 1 p.m., we've got a pretty important Treasury auction. That's going to be the 2-year note auction. And I think that one's going to be worth watching because this is going to give us a sense as to what the market's appetite is. After Powell came out last week and made it pretty clear he's not in any rush to cut. And in fact, they're changing the runoff of their balance sheet to buy them more time before their next cut. So seeing where the appetite is on the 2-year note from these auction bidders is going to be pretty important, specifically those that are not the dealers, the participants that are actually coming in to buy for themselves. That'll be interesting. So we'll be watching that later in the day. And then at 2 p.m., the headline risks go up quite a bit because we're going to have another executive order signing ceremony. I feel like these things are happening at a cadence unlike any we've seen in modern history. But here we are. This is the environment that we're in, and that can be a volatility catalyst. So we have 3 major volatility catalysts. Mark your calendar: 10 a.m., 1 p.m., and 2 p.m. Eastern. Just taking a look around. Let's see what we have going on in crude oil this morning. We're going to zoom out on some bigger charts just as we get ahead into the trading day. Got a little bit of positive feedback there. Thank you. All right, so we do have a couple requests and a couple of questions. Pedro asks, so the green dots in Bookmap mean stop. So Pedro, let me go back to the chart that we were on just a minute ago so I can talk a little more about that. So you see this green dot up top with the 125 by it and the dotted vertical line. That's showing you exactly that was a stop run, right? So it was multiple price levels where stops are being executed and a total size of 125 contracts. So that specifically is a stop run. The other larger green dots that you see as a part of a price action are volume delta bubbles. Green where there's buyers exceeding sellers, red where there's sellers exceeding buyers, showing you that delta or aggression by either side. So let me know if that helps to address that question. And I've been asked, can I check on Bitcoin? Yeah, absolutely. We'll do that in just a moment. Yeah, you're welcome, Pedro. Ships asks, hi teacher, speaking of the green dots, it's supposed to show more buying. How come so many times there's a big green dot and the market reverses? I feel like that happens to me all the time. That's such a great question. So, and this is one of the reasons, and this gets to another question that's right after it. So it's like everything kind of comes together, and I'll try to put it all together for everyone out there listening and watching. But Ship's question about why does a big green dot sometimes lead to a reversal? If you think about it, if you get too aggressive, if you spend a whole bunch of ammo and you get too aggressive, right? Sometimes that can lead to a turning point. And this is one of the reasons that I actually built the exhaustion and absorption indicators that I have to illustrate those turning points as they may happen. It's really important to watch order flow for this reason. So you can get a really big green dot and that can show aggression. But if you get a really big green dot after you've already had a nice move higher, that might be a bit exhaustive. So you have to ask yourself, what confluence of order flow is leading to that really big dot? Now, if you have icebergs and stops, you might see that it's a big stop run on the buy side, right? Like there's a bunch of shorts that are getting stopped out, so they're forced buyers. If that's the causal origin of that green dot, then that's not really bullish. That's exhaustive because you've got all these folks that were short and you have this move higher that pushes them out. So of course you have a surge of volume, shows up as a big green delta bubble, but it's forced buying. And so once those people kind of get pushed out of their positions, the market's free to go back to its normal, more routine price discovery, without the forced buying and selling from people off sides, and it may resume lower. So let me know if that helps. I've got to make a quick adjustment to the stream here. Just give me 1 second. All right, all sorted out. Just did a major overhaul on my system. And so there's a couple little things around the edges that I've got to smooth out here and there, but I've really happy with the overhaul I've done. It's pretty sweet. Yeah, you're welcome, Ship. Sorry, next question I have is from Olivia. Hey, Mayhem, regarding exhaustion and absorption voice alerts you have spoken about before. Am I correct in thinking absorption buyers and exhaustion sellers would both indicate bullish behavior or entry? So yeah, if buyers are absorbing sellers, that tends to be constructive. Of course, we want to see follow through. It can be a one-off. So it's like an alert to say, hey, look at the chart, see what's about to happen. We may have a catalyst here, right? Just the same as exhaustion of sellers. If you have sellers getting exhausted, like let's say they've just really all piled in, you have this big move lower, probably a stop run involved with that, with buyers getting knocked out as well. So you have that exhaustive move. That tends to be a potential turning point. What I really love to see in that situation, especially if we're watching futures and we've got the advent of MBO data, is iceberg buyers coming in size, basically saying enough. But yes, what you've identified, both of those tend to be bullish catalysts, and we just need to look for either follow through or confluence or both. Ideally, both. All right, so we're going to check on Bitcoin here in just a moment. Let me break out Trend Spider so we can get the big picture view. And so I'm still of the view that Bitcoin could move back into this range below, but buyers have been really aggressive these last 3 weeks, really putting in a meaningful low in this low volume node and pushing us back into this 21-week EMA. Right now, we're seeing resistance there. I think this moving average is worth paying attention to. Tends to be a decent line in the sand for Bitcoin and for other momentum-driven trading vehicles. Now, if we get above that 21 EMA and we start to push into this area of supply overhead, I'm going to lose a fair amount of that conviction that we're likely to get back into the 70 to 72K area. That's going to tell me buyers have enough ammo that they're starting to absorb some supply up here. It'll also be very important to see how we trade. We're likely to get caught, kind of mired, as we had been, for months. We sort of consolidated in this area after that large move. Getting back into that supply zone would tempt the same outcome. That you can see the same when we were in this demand zone as well. We just got sort of stuck there and consolidated for a while. So I think that's the other thing to look for is if we do get back up, let's say above 90,000 Bitcoin, that takes us into that supply zone and above the 21-week EMA, that makes it more likely that bulls are in favor, but we could trade sideways unless we're able to make a more meaningful break higher. So the worst of the downside risk would be behind us, but it doesn't necessarily indicate that upside is immediately next to come. It kind of says it's more likely we're going to have to chew through some of that supply. There's going to be sellers that are basically former buyers that become sellers that have been caught up there, have rode through this whole mess and have been just at the point now where they're like, I'll just get out, break even. I'm okay. I don't even want to profit anymore. Just get me out, break even. You'd be surprised how often that happens, by the way, where people say, you know what, this trade's not working out. I don't even want to profit anymore. I just want to get out, break even. And that's why you get a lot of these supply charts that work, because those trap buyers become supply. They become motivated sellers. It's like, I'll take it, even if I can. And obviously, if price goes too far against them, like let's say we get pulled into this demand area, that's where more of those buyers on the way down are like, okay, that's too far away from where I entered. I'm likely to become a motivated seller, even if I'm not able to get back my whole position's value. I'll get back whatever I can because now I'm becoming a little more fearful. Because a lot of these folks are playing crypto with leverage. So you've got to take that into consideration. So overall, I'd say right now, the level we're kind of trading up against on Bitcoin is really important. I'm going to put that at about 86,000. Let's call it 86,500, around there. I think is going to be pretty important. I'm sorry, 88,500. Around there is going to be pretty important. That's that EMA 21 week. And if we can break above that, I think buyers are able to push back into the supply and sort of start a larger consolidation pattern. But if we're getting rejected here, and so far we have been, we could start to see momentum shift lower. So let's watch. I think today's trading day is kind of an important inflection point for Bitcoin on the longer term. Now let's see if I have it all set up here. Yep, it should be here somewhere. Let me add it in because I'm not seeing it on screen, but we're going to pull it in here. And just backfill that data. And I've got a request for Cloudflare. I hear you. I'll get to that in just a bit. Markets are open. It's 9:31 a.m. Eastern. So while this backfill happens, I'm just going to pull back to the S&P and zoom in a little bit so we can just talk about that opening price action. Then we'll get back to Bitcoin and then Cloudflare, and then we'll go through other questions that folks have. Yeah, and we do have just a lot of flow coming through right now as well. So right off the open, just a little bit of selling pressure. I won't be terribly concerned unless we dump under 58.21. That's a pretty important pivot from the pre-market and just one of the intraday pivot levels I'll be watching. These pivots are based on order flow and price action. They're programmatically generated. So I'm not simply drawing lines on a chart and saying this is important. I'm actually doing this via algorithmic analysis. So those can be pretty helpful. Those are on charts that are available on our Discord for members throughout regular and extended trading hours. But so far, that inventory that we had to sell this AM is being absorbed pretty well overall. Zoom in just a little bit more to the microstructure. Pretty well balanced open overall. There are some new tariff threats, apparently. So something that we're going to have to take into consideration during today's tape with the notion in mind that yesterday's rally was in no small part driven by large sets of exemptions for those tariffs. So overall, pretty balanced open. We're going to start getting back into some of these charts here. So let's look at the Bitcoin chart. We have the historic fill. So overnight session, pretty constructive, and we're starting to see this push higher again here. So Bitcoin looking like it's got some get up and go. Let's look for that 88,500 level, see if we can get above the 21-week exponential moving average during today's session. I think if so, we could let out a pretty decent amount of short-term buying energy. If we get rejected though, that will likely reflect us lower. That's been an area to watch for Bitcoin, that 21-week EMA. And we looked at the supply and demand zones before. So overall, looking very constructive. I mean, you can't look at a chart like this and say, boy, I just want to fade that. This looks like an uptrend. Got higher highs, higher lows. Nothing not to really like here so far. All right, so I've got a request for Cloudflare and then some requests to discuss a little bit more about Delta on Bookmap. So happy to do that. Let me get that Cloudflare chart here. This has been a great company overall. I mean, I've been really impressed with the way that management has been able to capitalize on so many tech trends. I mean, they're going in a lot of different directions at once, but they're doing it pretty well. And this has been a company that's been hard to bet against for any really long period of time. Obviously, they didn't do too well in 2022 and they got crushed from the 21 highs, but this is a really long-term bottom that's happened on Cloudflare. They've really formed in the fire and brimstone of 2022. And you can see from there, the stock really never looked back. And this pullback here is likely an opportunity. Is the valuation stretched? Probably. Are they going to grow into it in time? I think they probably will. I also like that they're trading above the 21-week EMA. I do like using that as a momentum indicator. And overall, you know, we're in a part of the volume profile where there hasn't been a lot of exploration. So it could be quite volatile around here, particularly this low volume node we're in right now. But I think that we probably put in a near-term bottom to Cloudflare, so I would be looking for this to resume its uptrend. And there's a lot of tailwinds for the way that Cloudflare is able to grow. First, they've eaten Fastly's lunch completely and Akamai's to a degree. Second, they're expanding into other horizontal and vertical integrations to make their platform stickier and more valuable to their customers and also to be able to upsell them other services. So there's a lot to like about the way this company is executing. So let's zoom into Cloudflare just a little bit here. And we see Bitcoin pulling back just a little bit. Let's see if it puts in another higher low. You also see S&P. It looks like a little bit of a risk-off moment across markets. You can see S&P's coming down a bit here as well. So I'm just quickly taking a look at that as we wait for the Cloudflare data to backfill. Zoom out just a little bit. And we'll get some of the prevailing options flows coming in just about 10 minutes. See how that takes shape. We'll also get an update on some of the positioning levels across the S&P chain converted to ES levels using my SPX options visualizer tool. But yeah, just a bit of a pressure release off the open. We are now testing that 58.21 pivot that I was talking about. Again, if we do break below that and build acceptance, I think we have some room for continuation lower. Let's take a look at the NASDAQ here as well. NASDAQ also has a bit of that risk-off look off the open. Had some buyer exhaustion there identified as well. Right here, medium confidence buyer exhaustion helped to lead to a little bit of a rolling over. And that buyer exhaustion is happening when they're just getting a little too aggressive on how they're hitting the tape. You see that sort of indiscriminate smacking of the ask, and that, in size can get you set up for a little bit of being on the wrong side of the tape. And it's not like that's the top for the day type of print. It's more of a scalpable type of fade opportunity, right? You see a big buyer exhaustion print like that, gives you an opportunity to maybe do a very short-term agile fade. Sometimes it can mark a bigger top on the day if it's a much more high confidence buyer exhaustion print, but this was sort of mid-level. I got some more requests for charts, including Tesla coming in. I will get to those as well. All right, we're still waiting for Cloudflare to pull that historical data. We're just going back 6 hours on that. So just waiting for that to finish up. Let's take a look at Bitcoin again here as well. It does look like it's trying to put in a higher low here. We'll see. Recent historical chart data loading incomplete. Only local data was available for that time interval. Well, that's strange. Let's at least see if we can get 3 hours. Might be something going on with DX feed this morning. Well, while that does whatever it is that it needs to do over there, we're going to get to the next chart request. I think I did pretty good on the long-term Cloudflare chart. Overall, looking pretty constructive. All right, looks like we're getting that backfill on net over the last couple hours, so that's good. So overall, just consolidating, a little bit of pressure off the open like the rest of the market. Let me just pull up the order book specs. So pretty even book too, between supply and demand. You can see the supply, 71,000 offers, 66,000 bids. Pretty balanced book overall on Cloudflare today. So it's just moving with the rest of the market. And one other thing that I kind of like to look at is just the options exposure. So you've got a pretty decent amount of support driven by options exposure at 120 on Cloudflare. And then resistance, I would be really looking at the area we're starting to challenge today. This 130 area is the first wall of calls, and then 135 would be the next one I'd be watching for Cloudflare. All right, so I know I have a couple of other chart requests. Gold was in there, and then I've got Tesla to look at, so let's do that real quick. Yeah, maybe it's just DX feed today, then ships. That might be what's going on there. All right, let's pull up Trend Spider again. Boy, that's a weird looking chart. All right, so here's our weekly chart of gold. Notice also, I mean, we keep going back to this 21-week EMA, but there's a reason for it. Do you see how it works? It's pretty darn elegant. In this rally, going back to really the end of 23, every time gold kissed the 21-week EMA, it was a buy opportunity. Quite a ways away from it right now. Now, I'll tell you my view on gold, and I follow gold pretty closely. I've been trading it for about 19 years. Gold is an uncertainty hedge. It's not so much an inflation hedge, unless the inflation that you're hedging for is the result of uncertainty, if that makes sense. Gold is really about hedging for geopolitical uncertainty, policy uncertainty, economic uncertainty. And we have the convergence of all three. So it's doing really well in this environment. My price forecast for the first half of 2025 was $3,000 gold. Made that back in the summer of 24. And you could see we're trading in that level. And there's still buyers showing up. It's a very important psychological level. We've moved above it. I think we're more likely to see some consolidation for a bit here. That would be healthy. That's what I'd like to see. So maybe I'm also sort of talking about what I'd like to see for a healthy bull structure. You never want to see things go straight parabolic. And this move, while it is aggressive, it still does make some of that gold bull market that we had back in 2009, 2010, all the way up to 2013. This is not as extreme as what that was. Gold basically tripled in a short amount of time. It went parabolic. It really didn't even look back. This, at least you could see there's some look backs, there's some consolidation. It's a little bit more orderly. So I'd like to see that continue, meaning I'd really like to see it consolidate, come back, kiss the 21-week EMA again, and give us an opportunity to shake out some of the loose hands that get, a little bit more fearful on moves like that, the more leveraged traders. But overall, gold still looks constructive. I also think there's opportunities for silver in this market. But if I wanted to buy gold here, I'd need to see a shakeout. I don't want to get long right here, right now, because it's had such a huge move. And it's so far away from that 21-week positioning is a bit lopsided on the buy side. So I do want to see a little bit more of a consolidation or corrective move before I'd want to get more involved with gold. So I've scaled out of my core. I've had a pretty long-term swing in gold, and I've scaled out about 2/3 of my position now that we're reaching my first half of 2025 price target. And I'm looking for some of that consolidation, also rotating a bit. I'm putting some of that capital to work in silver. I'm putting some of that capital to work in some of the junior gold miners that I like a lot, like Rio 2. But be careful with those gold miners, whether it's Rio 2 or any others, they are high risk, and some of them chronically underperform gold. So you've got to be careful about that. So hopefully that helps with gold on the longer term. On the intraday, we're getting a decent little bid here in gold. We had one overnight. Now we're taking out the pre-market high, and we're seeing some of the sellers getting stopped out in that move. We also saw some passive buying leading into that push higher. You can also see on this chart, there's a lot of sellers that are increasingly off sides from some of the aggression they showed earlier. So we could see some more stop runs the higher we move, as more and more of these sellers sort of puke up those shorts that they have on gold. And so Pedro was asking about delta in Bookmap as well. I want to just quickly discuss how you can look at deltas in three easy ways. And let me just add the third before I talk about it, because otherwise it won't make a lot of sense if it's not there. So you see volume bars for one. Volume display options, solid or gradient, total volume or delta, buy minus sell. On the bottom, there are those volume bars. Those are delta volume bars. So you can see just recently on gold, that was an aggressive delta of buyers exceeding sellers in gold. So that's one example of deltas in Bookmap based on volume bars. The bubbles work the same way. They are deltas based on buyers or sellers being the larger aggressor. The larger the bubble, the larger the aggression. Then when you look at the session volume profile, that is also a delta, right? So this is a delta that's based on price and volume. It's a little bit time agnostic. It's just looking at the session, right? It's not like looking at the last minute as a volume bar or a bubble may be looking at a very specific period of time, depending on your chart time frame. The session volume profile is looking at the entire session and showing you where the deltas were for buyers and sellers at specific price levels. So Jorge, I'm going to get to your question in just a moment about the correction. But Pedro, I want to make sure this answers your question about the deltas. Let me know if that helps on the deltas, because there's three different areas that I wanted to go over really quickly and understand that. The delta on the volume bar, the delta on the bubbles, and the delta on the session volume profile. And we have a chart request for Tesla as well, so I'm about to get to that. We do see a little bit more selling pressure on ES, so let's quickly visit the ES chart here. You can see we're pushing lower. We broke below that 58.21 pivot, and we're starting to push into some pretty important levels of call positioning on the S&P 500 options chain. We're also getting to the day's low that we had just set about 6 minutes ago here, retesting that low. All right. Seeing some continued selling pressure on the S&P. We were just going to focus on that for just a moment here and get back to your questions. Realize we've got just about 11 minutes left here, so I'm going to try to get to everyone and everything. Making new lows here. And we are starting to see some of the flows coming in through the options market and CBOE. It's call heavy so far, about 2-to-1 calls to put. So there's still some bullishness, some reflexive bullishness in this market. We do have some buyers getting stopped out here, however. 391 contracts stopped out on the S&P futures. That's likely some of the buyers that were up here in the session volume profile getting kicked out. All right, so we're going to get to a Tesla chart, but first I want to quickly answer a question from Jorge. Chief, what's your view on the recent correction in U.S. markets? Is it over? You know, that's really up to this administration, because to say it's over is to say we have certainty. And to say we have certainty is a bit of a presumption right now. So zooming out, the big reason that markets are having such a nasty correction, it's one of the nastiest corrections we've seen in terms of velocity in a while, and it's been pretty unforgiving until recently, has everything to do with uncertainty. Uncertainty around the economy, around fiscal policy, around trade policy, around geopolitics and foreign policy. That's all created this big risk-off dynamic. And so I think that's something that we need to get some clarity on before we can say with certainty that the correction is over from a big picture point of view. Based on the kind of technicals we're seeing and the order flows and the imbalance we had coming into this, it's becoming more likely that momentum starts to shift to neutral and possibly even positive. But again, I think that right now, macro has never mattered more. It's really about policy. It's really about getting certainty and clarity. And unfortunately, insiders will probably have that way before we do. So we'll probably have to look for those clues in the tape before we maybe get an official announcement. And I go back to yesterday when we had that 5,000 lots of iceberg buying right before a policy announcement. There's obviously people that probably know what's happening before we know. So we're likely going to have to really pay attention to clues in the market to get that clarity. The clues we're getting so far from yesterday and to some degree today are a little bit encouraging, but I think it's early yet to say it's an all clear. Now, right now, we are getting a shift in options flow, so I'm going to address that, and we're going to get back to Q&A. We see a big shift towards put flow now, a big shift towards put flow now, the warm put and hot put showing markedly lower levels here. And they are outpacing the two most active calls about 2 to 1. So this is from my SPX options visualizer. It's an add-on for Bookmap. You can learn more about it by visiting tradera.com/SPX. So let's get into the nitty-gritty. Tesla chart. So I really think that this thing got exhaustively oversold, and we talked about it a bit on the Trader Aid Discord, that even though the company has no shortage of problems right now, the sentiment is so negative against it. And we even see that in option skew. So you could see put skew getting blown out. Anytime put skew gets really, really bearish, and when everyone's crowding into betting against a company, it's typically a short-term turning point. It doesn't necessarily mean all the woes of the company are behind it, but the idea that Tesla is just going to crash to zero is unlikely. I do think that the management needs to get their act together. It would be helpful for Musk to probably distance himself a bit, since his political endeavors have made some of Tesla's core demography less likely to want to buy their cars, and that's caused slowing sales around the world. But you do get to a point where reflexivity kicks in, and put skew got so bearish, everyone was crowding into all these bets against Tesla, that you were likely to see some type of turnabout. Yesterday's short covering bonanza and call buying bonanza was likely a result of that. So today we're giving back a little bit of that, but overall this does have sort of short-term bottomy vibes. The way that this thing is, this chart is looking. We're also breaking above the 21-day EMA and seeing histogram momentum turn positive. We're getting into a low volume node area here, which could be a little bit more volatile. We've traced back from it. So I really need to see price get to 300 and really push higher from there to say, okay, buyers are certainly taking control. But overall, sellers no longer have an advantage. That kind of bottom that we just put in the move we had on Monday caught a lot of people off sides. So I'd say that near term, as long as we're above that 21-day EMA on Tesla, buyers still have an advantage and can try to push this thing higher. But we have reset that exhaustive put skew. It's no longer quite as bearish on Tesla. So that element, that catalyst, is kind of behind us. Now it's really up for buyers to take the torch and run with it. And I would say 300 is going to be the next really big decision zone. It's a very low volume node. Buyers haven't, and sellers really haven't liked to transact there, and that tends to be a decision point for the market. So let's see if we can stay above the 21-week EMA, get to 300 and challenge it and how we react there. But overall, I'd say that the current technicals of Tesla are favoring the buyers, even if the fundamentals and the overall company situation is not looking too tremendous, to borrow a phrase or a word from our president. You got it. All right, we've got some more questions coming in. Give me a moment. I'm just reviewing everything here. And by the way, markets are pushing back above 58.21 pivot on ES. So let's just take a quick look at that as well. I'm going to put that on screen while I review your questions. We're also pushing above the point of control, the session point of control. That's important. So buyers are certainly getting a little more involved. And some of this AM really intensive put buying, sometimes that's just in time hedging. And we do have event volatility catalysts, including that 2-year note auction coming up. So some of this may be just-in-time hedging as well, just something to contextualize. And that, boy, that 5821 pivot and volume profile, or that basically that point of control, that key part of the volume profile confluence zone, that's certainly a decent area of resistance, isn't it? All right, let's get back to Q&A. Does it make sense for individuals with large portfolios to hold put options as insurance for December 2025 to hedge against uncertainty? Boy, that's a tough one. I mean, I don't know what your portfolio is set up to be, like how diversified you are, whether you prevailingly have exposure to the U.S. and so forth, what your time horizon is for your investments, or if you're employing any kind of leverage. So, with all that of a disclaimer out of the way, what I'd say is vol is not as cheap as it was. So, buying insurance here it's a little bit more expensive than it had been. And so I would, if it were me, I would look at employing spreads. So I'd be looking at either calendar spreads or vertical spreads on SPX puts or VIX calls to insure out a portfolio if it was largely correlated with the S&P 500. Going out to December, I'm not so sure. Typically, when I'm trying to insure against vol and tail events, I'm really looking out 3 and 6 months. So I'd probably look out more to like June to September OPEX for some of that exposure. And I don't know that it's all about just buying puts, quite frankly. I mean, a lot of the times I feel like it's better to have a more diversified approach, a more non-correlated approach. So one of my favorite trades this year has been SPLV and SPHD. Right, so the SPLV is low volatility S&P 500 large caps, and SPHD is low volatility S&P 500 large cap high dividend payers. You look at those, and it's like the market's not even in trouble, right? They've been well bid. It's part of this rotation. And then to get more exotic, you can pair them against something like fading SPY, right? So you could be long SPHD fading SPY, or long SPHD fading SPHB, the high beta large caps. I feel like those pair trades are better hedges overall. They tend to move with vol, but they don't come with the same cost and time decay. So that's been one of my plays, is really looking at like even long RSP, short SPY. It's a much lower beta pair trade, but it works and it does hedge against some of that risk. So it really depends on kind of how you're running your portfolio. Also, I think it's a good time to consider getting some more exposure to international stocks, to less loved sectors and industries in the S&P 500. We've seen there's been this rotational flow away from the mega caps and into other sectors and industries, primarily defensive ones like healthcare, utilities, consumer defensives, things like that. Even energy, though, has had a decent bid as well, especially given how poorly oil pricing has been. You've seen that relative strength in energy kind of giving you a sense that maybe they're seeing something else. The lack of, willingness or concern about regulation in the industry could be one catalyst. We're probably going to see some of those regulations come off. But nevertheless, that's another area of relative strength to consider. So hopefully that's helpful. But I would look at basically hedging from more than just the puts, or puts on SPX or calls on VIX perspective. I think there's other opportunities out there as well. We have data coming out. It's come out. Consumer Conference Board confidence came in lower than expected at 92.9 versus 94 forecast. New home sales also came in marginally lower than expected at 676,000 versus 680,000 forecast. Still better than the previous reading on new home sales, and quite a bit worse than the last reading on consumer confidence. Market's taking a bit of a turn lower now, decisively breaking below that 58.21 pivot, and looking like that put flow below is becoming a little bit more magnetic. We also have bids coming in below 58.10, 58.06, 5800. Those could be a little bit magnetic, pulling price lower towards them. That idea of auction theory, we're seeing larger participants show interest here, and we also have the supply to get us down to those interest levels. So overall, the data is giving us a little bit of a sour note. Let's see if we break the day's lows, but this is looking like a bit of a heavy tape so far. Remember, up ahead, 12 p.m., we've got ECB's Nagel. 1 p.m., we've got two-year note auctions. 2 p.m., we've got Trump signing executive orders. So there's something for everyone today. Thank you, everyone, for tuning in. If you want to look at what we're doing at TraderAid, visit us at TraderAid.com. Use the promo code Mayhem20 for 20% off your first billing period. If you want to pick up a copy of Bookmap, visit TraderAid.com/bookmap. Scroll down to the special offers. And if you'd like to check out the SPX options visualizer, visit TraderAid.com/SPX. I'll be back next week, 9 a.m. Eastern, for the next episode of Back to the Futures with me, Markets and Mayhem. Thanks again, everyone. Have a great trading week ahead. I'll see you soon.